Hi. So today the topic I want to talk about is getting student loans. So this video is not about necessarily promoting getting a college degree. I've gotten several in my life, um, I want to give you some information, and this is based on, the fact that throughout my life I have tried to educate myself on financial matters. And I've had my own experience with education loans. Um, and I learned some things over time and got confirmation about some things that I think you should know, or at least be aware of to do your own research, um, so that you maybe make um, maybe some different choices, or that you're armed with enough information to know that you may want to consider doing certain things with that education loan, whatever it is. So let me give you the context and sort of back up my story and how I sort of stumbled upon this. So when I got my first undergraduate degree, I had a full scholarship. I never had to take out any loans for that. Um, and so I consider myself fairly lucky in the fact that I was able to get something like that. In fact, by the time I graduated, I was only paying $50 in tuition, because my scholarship was a set amount each year, and tuition goes up usually. And so I ended up, by the time I graduated, I was paying $50 a semester. Um, and in the summer, I did a job where it basically paid me enough to take care of whatever tuition I paid, what little I paid, and my books, and driving back to forth to campus because I went to a local university. So I got out of that one with no debt. So I went into the workforce with no school debt. Now, of course, that was back in the 80s, so that tells you how long ago my first degree was. And back then, tuition sounds excruciatingly cheap. I think my tuition was something to the order of between $2,000 and $3,000 a semester, which is, compared to today, is just crazy to think that that's what my scholarship covered. Okay. So in between all of my degrees, I also got another undergraduate degree and a master's degree in the 90s that was basically paid for by employer reimbursement programs, which, yay, I got out of those with no debt. And so where did the debt come from? So eventually, in the early 2000s, I was working for an educational institution, and they had doctoral programs. And I thought, and I've always taken advantage of benefits like that. I figure it's worth it, right? And so they offered a sort of like partial reimbursement or a partial discount on a doctoral program. And I thought, it might be my only time to get one if I'm going to get one. And as it turned out, I've utilized that degree quite a bit and taught at universities and everything. And so, it has been worthwhile to get it. Um, but I did have to pay for some of that. So I did come out of the doctoral program with about a $40,000 school loan. Okay. Which, doesn't sound like a lot. I'm sure some who may watch this video or listen to this podcast um, may have higher levels of debt coming out of school, so I recognize it's all relative and everything. But for me, it was the first time I had an educational loan, and I didn't know much about them actually at the time. So I do remember though, um, because I pay attention to my debts, and I pay attention to my financial performance as a household. I do check websites fairly frequently, and I try to keep track of what do I owe, how can I accelerate, paying off debt and all that kind of thing. And I noticed something, and I couldn't explain why it was happening, but it was happening, is that if one day I wrote down what the balance was on my account, a few days later it would change. It would go up. And I'm thinking to myself, why is that happening? And, and I've heard of people, their education debt actually increases over time, which I thought was weird, but I was seeing it happen on my direct government loan. And I thought, I don't like that. Because typically, like if I have a mortgage, which I do, I have a mortgage on my house. If I pay something down and I see the balance, that balance stays there until I make the next payment. And as long as I pay it on time, it keeps going down. It doesn't go up. It doesn't change value going up. That was just totally opposite of anything I'd ever seen on a loan. Fast forward some years, I do my doctoral studies and everything, get that all done, and paying that off and all. And I had noticed that. And eventually I saw a program, a documentary. Now, whatever you may think of MSNBC, I'm not talking about this in political terms. I'm talking about it in the fact that they had a great documentary um, about these education loans and kind of how that came into existence, kind of how they're treated these days. And the law that created this is still on the books. It hasn't been fixed, it hasn't been revisited. And that original, well, it wasn't the original law, it was actually a law that was reauthorized back in 1998 during the Bill Clinton administration. And it's that bill that has created a couple of things. One is education loans cannot be discharged in bankruptcy. It's one of the things I did not know. Not that I've had to ever declare bankruptcy, but I thought that that documentary was very interesting in the sense that it's like you would have to have an extreme circumstance to get it discharged, which might mean that you've died already or that you have a terminal illness, and been diagnosed as that. Um, so it is a debt that will follow you around forever. Okay. But the second thing that it talked about, and this is what I had noticed, this what I learned now explained why my balance was changing and going up, is because on a typical loan, you'll make that one interest payment on the calculated payment. So any payment like on a mortgage, or a car loan, you'll make that payment, and a certain portion of it is going to go to principal, and a certain portion of it is going to go to interest. Well, apparently, on education loans, you pay interest on interest, and it's daily. And so, if that is true, then that's why my balance kept changing. And so I didn't know that, but before I had learned this from the documentary, I had decided I'm not comfortable with the balance on that education loan changing so often. That just didn't make sense to me, and I wanted it gone. Okay. So I decided at one point when I was doing a refinance on my house that I would roll that debt into the mortgage refinance. Now, I don't know if I've actually paid off that $40,000, but in my mind, I have, because if you listen to other episodes, you know that I like to prepay, on mortgages and car loans and stuff like that to get it out of my hair after a while, and try to pay it off sooner. And so, like the original amount of my house plus the education loan that I added to it, The amount that I owe now is like right here. So, I think I have far exceeded paying that off, and have gotten, my mortgage down even lower. And I honestly believe that the only way I've been able to do that is because, I make a lot of extra payments. Plus, I'm not getting charged interest on interest. Okay. So I don't know if you can get financing from another source to just pay off whatever government loan you may have, but it might be worth exploring and talking to people, to different lending institutions, maybe through a refinance, maybe a HELOC loan, who knows? But, there are different ways, and probably multitudinous ways that you could probably accomplish that, so that you're not constantly getting penalized. And I feel like it's a penalty, right? That you're constantly paying, interest on interest. That doesn't make any sense. And that's just profit. That's pure profit for a government agency to charge that. Um, so it's just something to be aware of. It's something to educate yourself on. Um, it's something that, like right now, I don't have any access to the statements or anything like that, to kind of look at kind of how all this was calculated, if it even shows it. So in that regard, um, I don't have personal confirmation that that's how they work. Um, but you know, if your balance keeps going up, there's something happening that is causing that to happen. And if you can roll it into something else or pay it off through a different sort of debt vehicle, not a credit card though. I'll talk about credit cards on another episode, but um, get it paid off to where you're not getting all that extra interest. Um, and so it's something to definitely think about. It's something to definitely explore, um, and see. And if nothing else, if you do have a student debt of some kind, look at a balance one day, check it like a day later, a couple of days later, see if it's changed and gone up. Because if it has, most likely you're being charged interest on interest. Okay. All right. So thanks a bunch. I'll talk to you soon.